This is Cashflow Ninja, episode 151, with Paige Panzarello.
Welcome to the Cashflow Ninja, the podcast empowering and inspiring people to discover how to generate their own income and manage, grow, and protect their own wealth in the new economy. Now, here is your host, MC Laubscher.
Hello everyone, MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today, and in today's show we're going to be looking at how to create cash flow and income streams from notes. My guest today is Paige Panzarello. Paige is the Cashflow Chick. Having been a real estate investor and entrepreneur for over 20 years, Paige has had experience in many different forms of real estate investing and is an expert in her field. She currently focuses on non-performing notes that she purchases all across the United States. Paige also teaches a note class that drills down into the details of how to buy non-performing notes, what to look for, due diligence to perform, and how to mitigate risk. Having experienced the hardship of economic downturn and what she calls a very difficult learning experience, Paige knows firsthand how life can happen to everyone. Her company, called to Cash Homebuyers, Inc., was founded to help people in distress. She lives by the motto, people first, profit second. Paige is driven to help educate people on the importance of passive income, deal evaluation, money and debt management, and how to review a profit and loss and balance sheet. She wants everyone to elevate their situation and become free of dependence so that when life happens, they will be ready, not broken. In order to do this, Paige hosts Robert Kiyosaki's Cashflow Game Monthly for free. Paige says this is such a vital part of our life education that is too often missed in formal education. I love to see the light bulb come on and the excitement of doing a creative deal when one of my group members has an epiphany or what makes that great deal happen. Several of her attendees have taken their education and actually applied it to real life by investing in various different forms of real estate that provides passive income. Real estate investing is a team sport, and Paige believes that everyone can and should invest in real estate, whether for your own portfolio, as a private money lender, or as a joint venture partner. She teaches her students, joint venture partners, and private money lenders not to settle for 2%, 3%, or 4% returns. Please share your feedback and thoughts with me on today's interview. You can let me know your thoughts on Twitter by tweeting me at MC Laubscher or by email at info@cashflowninja.com. And please remember to join our mailing list by signing up at cashflowninja.com or texting Cashflow Ninja, one word, all capitalized, to 44222. That's 2 4s and 3 2s. You can support the show by becoming a patron on Patreon for $10 a month, and when you become a patron, you get access to our private Facebook page and a Cashflow Ninja t-shirt. You can become a patron by visiting cashflowninja.com/support. Have you read Rich Dad Poor Dad? Are you interested in real estate investing and don't know where to start or how to get the results you want? For valuable information to get you started, visit JoinOps Properties at joinopsproperties.com. If you're not earning at least 8% on your cash, you do not want to miss the private lending presentation for non-accredited investors done by Jimmy Freeland and Bob Scott. Discover how to create an income stream from real estate without the management headaches. You can access the presentation at cashflowninja.com/private lending. Spartan Invest have a proven plan and system helping investors creating passive income and wealth through turnkey real estate ownership in the exciting market of Birmingham, Alabama. Find out why Birmingham has got it going on, why it's a steal right now, why it's a millennial hangout, a hidden gem, and one of the most exciting investment opportunities you have never heard of. You can download your free report, 5 Big Reasons to Invest in the Magical City of Birmingham, Alabama, at cashflowninja.com/Spartan. I've spoken about the most powerful system on the planet on the show, the banking system. And my firm, Valhalla Wealth Financial, helps people reclaim the banking function within their own lives through leveraging the premium tools and strategies of the wealthy. If you're interested in reclaiming the banking function within your own life and the infinite banking concept, you can access a free webinar presentation at cashflowninja.com/be the bank. Paige, welcome to the show.
Well, MC, thank you so much. I really appreciate you inviting me on.
Can you please share a little bit about your background and your journey with my listeners?
Absolutely. I've been in real estate on the investing side for over 20 years. I started out as a property manager and quickly realized that that was not something that I was good at. And then I graduated into owning my own construction company. I've done some fix and flip. I've done real estate tax deeds, tax lien sales. And then I landed in non-performing notes. And I have found that this is my home. I'm really happy here.
And I'm very excited to get into notes because this is a topic that I'm not very familiar with and don't know a lot about. So can you please explain to me and my listeners what are notes, and are there different types of notes that you can buy?
Absolutely. Absolutely. I actually get that question a lot, and people deal in notes every single day and they don't even realize it. So basically a note is a promise to pay. There are many different kinds of notes. In other words, if you finance a car, you sign a note. You're promising to pay the bank back for the purchase of the car. If you buy a house, same thing. You promise to pay the bank back. Even a credit card is a note. When you sign on the dotted line in a credit card, you're telling the bank that you're going to pay them back for fronting the money for your purchases. There are notes that are they're not collateralized by anything, meaning a credit card. There's no guarantee that you're going to pay them back, and it's not attached to anything other than your promise to pay. And then there's collateralized notes, and that's the space that I work in. I buy notes that are non-performing, but they are collateralized by the house. So I'm in first position, non-performing notes. That's what I focus on.
And a non-performing note is when the note is not being paid.
Correct. So our borrower has had something happen, and they can't pay or they won't pay. And so the mortgage has been in delinquency for a period of months or years.
Now, why would someone buy a non-performing note? Because it means that someone isn't paying, right?
Absolutely. MC, that's such a great question, and I get that a lot because you're right. Why on earth would somebody buy something that the borrower is not paying? We do this for a couple of different reasons. Number one, we are able to procure and buy these notes at a substantial discount. So, if we're talking about anywhere between a 40 and a 50% discount on the face value of the note, there's a very good chance that we are building in quite a bit of equity, right? So we have a lot of working room in order to be able to work with our borrowers. And that's something for me as an investor that's really important, because one of my focuses is really to be able to help that borrower stay in their home even though they have been non-performing.
So you're getting an equity position in the note, and then how do you create cash flow from this non-performing note?
That's another great question. So yes, we're building in equity when we buy the note. And as you know, just about everything in real estate, when you make your money on the buy and you collect your money when you sell, right? So in notes, and another reason I love them is that there's plenty of flexibility in terms of exit strategy. We generally have about 21 to 23 different exit strategies that are available to us when we deal with notes. But we generally only use 4. So in other words, we can help the borrower because we've built in a huge cushion of equity. If a borrower has already vacated the property, or they want to sign it over to us in a deed in lieu, so it becomes an REO. So deed in lieu of foreclosure, so they're going to save their credit a little bit versus having a foreclosure on their credit rating. Or we foreclose, we can sell that property and very likely make a profit. Now, the better option for us and how we can generate chunks of money and cash flow, which to me as an investor is important. If we can help a borrower to get them to reperform, we're going to have them put a little bit of skin in the game, which makes sense because they haven't been paying, right?
Right.
So we're going to have them initiate what's called a reinstatement fee. And it's going to be a nominal fee, generally only a couple $1,000s, sometimes a little bit more, depending upon the size note that we're dealing with. And that puts a little skin in the game. So now we've generated a chunk of cash. And if we can work with them on a monthly basis to get them to reperform so that they pay us on a monthly basis, we're now generating cash flow, right? It helps us and it helps the borrower. Now, at the end of a certain period of time, we now have what we call a seasoned note. So we can sell our note to another note investor that buys performing notes, right? We can hold on to it and continue to cash flow on a monthly basis for a period of time, and then we can sell it, or we can just hold on to it for the duration until the end of the term of the promissory note that the borrower has promised to pay and the maturity date comes due, or we can refi it out. So we have a lot of different options and flexibility when it comes to notes.
Can you give me an overview just of the process of exactly what steps do you take to buy a non-performing note? Absolutely.
So like anything in real estate is a team sport. I'm sure you would agree.
Absolutely.
Absolutely. So a lot of this is being able to build your team and then work with your team to be able to acquire anything in real estate, whether it's buy and hold properties, whether it's fix and flip properties, et cetera. Everybody needs to work together. You work together with lenders. You work together with your JV partners or your own cash, banking, et cetera, et cetera. So a lot of people don't realize that everything in real estate is a team sport. And it's the same holds true for notes. So you've got to develop your relationships. You've got to develop your relationships with asset managers, other note investors, people that you may not even know, mortgage loan originators. They have access to people. So you need to be able to develop that team. Once you have some notes that are in your purview, then you're going to do tons and tons and tons of due diligence. So let me say that again: due diligence, due diligence, due diligence, because that is going to be what mitigates your risk, right? So right. The more information that you have on the collateral that is securing your note, in this case, because we only buy first position, non-performing. So the house is the actual collateral, and we do a ton of due diligence on that property. And once we complete our due diligence and are satisfied, we do about 3 stages, 2 of which are free and 1 is paid. Then we will go ahead and purchase the note. Now, of course, our asset manager has to cooperate in here, so we'll do the 2 stages of due diligence first that are free. Then we will make an offer on the note, and once the note offer has been accepted, then we will do the paid due diligence. That's why we do it in different stages, because we don't want to pay for every note that we look at in terms of due diligence if we don't have an accepted offer from our bank, right?
Right.
Excellent. So, and then you just go through the process once you perform, and this is something I really want to talk about and stress to you, MC, is that in note investing, it's a little different because it's a big space, but it's a small space, right?
Right.
Everybody is very familiar, the people that we deal with and the asset managers that we deal with. And when I use that term generally, because we deal with other note investors, we deal with brokers, we deal with small regional banks, we deal with hedge funds. And so I call them all mass asset managers, the people that we're buying from. They are all very familiar with each other. It's a small space in terms of reputation. And so when you start out as a note investor and continue through your process of note investing, you want to make sure to protect your reputation. And how you do that is by doing what you say you're going to do. So you've got to perform. If you say you're going to buy a note, then buy it. If you don't buy it, there's got to be a very, very good reason why you don't. Make sense?
Absolutely. And the other question that I had to you mentioned the 3 stages of due diligence, and
yes.
It really piqued my interest. What are the two? Just walk me through the 3 stages, if you don't mind. Just wanted to get a little bit deeper into that.
Sure, of course. Great question. Okay, so the initial tape that comes through is basically a list, an Excel spreadsheet of the assets that the bank or the asset manager has for sale. So we will go through and based on different variables, population, the size of the house, the loan to value, the current market value, all of those different things. So we will take all of that information that's provided to us by the bank, and we will do an initial analysis. That's stage 1, using the bank's numbers. If for instance, for me, population is a big filter, one of the biggest, and it's one of the first filters. So if I don't have if the note is not located in a county that has a large enough population, I don't evaluate it. So those are things of the first stage. The second stage, we're going to dig a little bit deeper. We're going to do our own valuation of the current market value of that property that's securing the note. We will go through and incorporate some realtors' help. We will call on delinquent taxes. So all of those little things are free and public knowledge. And then once we have all of that information gathered together and it still passes the muster where we anticipate in our 4 exit strategies that we will turn some semblance of a profit, and we do have thresholds for that, that we will proceed with the offer to the bank. Now, once the bank accepts the offer or counters our offer, once we have an agreed upon price, then we will start doing some paid due diligence where we will pull ownership and encumbrance reports, also known as an O&E report. We will pay for certain valuation models for the current market value and a few other things that go into the paid process. And once all of those, that third kind of scratch and sniff test, once that asset passes the muster, then we will go ahead to purchase agreement and we will transfer funds and proceed forward.
Now, what are some of the exit strategies that you have if you still perform all these stages of due diligence and you'd still run into a bad non-performing note? What is how can you manage that position and how do you protect the downside?
Sure, absolutely. Well, I'm going to say that there's no such thing as a bad note. There is such a thing as buying a note badly. Okay. So, and how you mitigate against that is, again, due diligence, due diligence, due diligence. Now, that's not to say that once we start into a note and we've done all of our due diligence, let's say, for instance, when we buy a note, we will always, always, always have boots on the ground, take a look at the property. And the reason is because, and we don't, the initial first 2 stages we'll maybe look on Google Earth. But once we incorporate a realtor, we always have boots on the ground go by the property to make sure that the house is still there, because that's your collateral on your investment, right?
Right.
So you definitely want to make sure that you do your due diligence, because again, there are no bad notes. It's just buying notes badly. Now, sometimes we buy a note and, again, focusing on the 4 exit strategies, which are foreclosure, that's our least favorite, deed in lieu, short sale, or we get the note to reperform. We anticipate all of those outcomes, and we kind of do an analysis of all of those outcomes based on the fact that we're not going to be able to know until we purchase the note what our final exit strategy is going to be. So if we turn a profit at least in our analysis of those 4 exit strategies, then we're going to buy the note. Now, let's say we buy the note and the market turns a little bit. There's a little bit of a dip. Okay. Or let's say we buy the note and 6 months later, we're still in the process of working it out and lightning hits it and it catches fire. Well, one of our protections is that we always put insurance on the property that is collateralizing our investment. That is the first thing you do when you complete the sale and purchase an asset. So you always want to mitigate your risk. Let's say you can't sell it for what you thought you were going to sell it, or there was a little bit of repair that needs to be done. Because you've got such a huge cushion of equity, you're going to be able to adjust and flex based on the actual conditions that are surrounding that asset, right? So you can still protect it. And then worst comes to worst, let's say the worst case scenario happens, which has never happened in the history of our country, but let's say property markets dip 50% in less than 6 months' time. That's never happened, but let's say it does. All right, well, we still have paid cash for this asset, right? So could we possibly put a tenant in there? Sure. And now we're cash flowing again. So if we put a tenant in there for a couple of years, now we've got some cash flow going. And a couple of years later, when the market adjusts or corrects, we can go back to our original plan of attack and our original exit strategy and sell it. So there's so much flexibility with notes. Just as long as you've done your due diligence initially, that is where you're going to make your money. And on the end, when you sell it or exit it, that's when you're going to collect your money. But due diligence is so important.
Very, very important indeed. Now, if someone's interested in notes, where do you source your deals, and where do you come across all of these note deals?
Sure. Great question. Okay. So again, back to the team sport. If you're a new investor, I would absolutely, the thing that a new investor needs to do in terms of notes is really get some education. It's very easy to go out right now online and buy a note. But if you don't know what you're doing, you're going to get hurt. And I strongly urge you not to do that. There are some pitfalls, of course, that if you don't have the education, you'll get hurt, and I don't want you to do it. So again, there are websites out there, plenty of very reputable investors that have websites that sell notes, plenty of other note brokers that have websites that sell notes, but your first start is definitely to get the education. Also go to networking groups. So I source my notes by a variety of different things. I reach out to asset managers. I reach out to, and I find them through networking. I find them by contacting them on other online sources. I go to REI meetings. There are note subgroup meetings where there are other investors and other sources to purchase notes. So really, it's again back to your team. What we do, we deal with different banks, brokers, small regional banks, hedge funds. So you just have to really open your mouth to the people in your network and talk to those that you have access to. Really great resource to do that also is hard money lenders. They know lots of different agencies and brokerages and other note holders where you can be put in contact with the appropriate people. So really build your network and buy from those that have a solid, stellar reputation.
You're listening to Paige Panzarello on the Cashflow Ninja podcast. We will be right back after a word from our sponsor.
Are you on track to achieve your financial goals? Income-producing real estate is the most historically proven way to accumulate wealth and has created more financial freedom than any other means. Norada Real Estate provides everything you need to invest in the best turnkey cash flow rental properties. Our simple, proven system will help you create real wealth and passive monthly income. Get your free strategy session with our knowledgeable investment counselors at noradarealestate.com. That's NORADA realestate.com.
You're listening to Paige Panzarello on the Cashflow Ninja podcast, and now back to our interview. Now, Paige, how does one finance these notes, and how do you finance your deals?
Great question. That's a great question. The one thing that is different in terms of notes versus other forms of real estate investing is that there are no financing, not really, of notes. So I can't go to a hard money lender and say I need, X amount of dollars to be able to finance the purchase of notes. You actually do need to have cash. These banks that we deal with are on a cash and carry basis. And so for us, we of course have our own cash in. And when I say us, I mean myself and my team. We have, and my business partner, we do have our own cash in the deal. And we also use other people's money and joint venture. So we do have people that have 401k funds that are sitting there in a self-directed or a solo K or a self-directed IRA, and they're only earning, as you know, MC, maybe at best, 1%, 2% at best. Those people are, we can offer them much higher returns in terms of either a joint venture or even a loan basis from private funding. So that's how we fund our deals, and it's worked out very well for everybody.
Now, Paige, you are investing in notes in the derivative of the real estate, and we talked about the due diligence and how important that plays into as well. For the listeners out there that is interested in generating some passive income and cash flow, and their strong suit is also not being a property manager of the property. Can you share in your experience just some of the benefits that you've had weighing up the two options of investing in non-performing notes versus having the rental investment properties?
Oh my goodness. Let me count the ways, MC. Yes, absolutely. Okay, so for me, the big three are note tenants, toilets, and taxes. So when you invest in non-performing notes, you don't have to rely on a tenant. You have a borrower versus a tenant. The taxes, of course, are paid when you have a borrower versus a tenant. The taxes are paid. The property taxes, in essence, are paid by your borrower. When you have a buy and hold property, your taxes for your real estate taxes, you have to pay them if you're renting it out, right? Your tenant's not going to pay your real estate taxes.
Right.
And then of course, toilets. So when you have a rental property, if the air conditioning goes out, who is the tenant going to call? They're going to call you or your property manager, right? Who gets to pay for that? You do as the landlord. So in notes, when the air conditioning goes out, who does the borrower call? They call the air conditioning repairman. They're not going to call me as the bank.
No.
Those are some of the big, ticket, the big reasons for me as an investor in my identity, to go with non-performing notes versus rentals. Now, that's not to say that I don't have some of my portfolio involved in some multifamily, because I do. It's a small portion because I do like the consistent, what I call mailbox money. However, non-performing notes is the vast focus of my portfolio for those reasons. Also, another one is tragedy. Let's say something happens to the home. There are plenty of places across the country, as you know, MC, that because we buy all across the country, that have little things like hurricanes and tornadoes and earthquakes and a few other things, fire. So as the bank, when we're in a situation like that, the insurance that is in place, we get paid first. We're not the last on the list. When you own a rental property, the last on the list is the homeowner, right?
Right.
So for me, it just makes a lot of sense. And I'm going to say this, when I started looking into note investing several years back, I thought to myself, banks are banks for a reason. And it made a lot of sense to me. And if you go to any metropolis, who owns the biggest buildings? Banks. So I am really in a unique position again, where I've been very fortunate in our investments, and it just makes a lot of sense to me to continue down this path and be able to help people as much as possible without having to fix toilets.
So true. And I have always talked about the ways that you have to think like a bank, you have to act like a bank, and you have to be the bank. And every strategy or asset class that you're in, because as you mentioned, last time you and I checked, they don't really have the smallest buildings in any of the cities all over the country.
Exactly.
Now, you touched upon, you guys look at all across the country, you and your team, and actually, when you were speaking about that, one of the questions that I wanted to ask is, because of different laws in different states, are there any particular states that you focus on, any particular markets, or it's in most of the states across the country?
Most of the states across the country, we focus. There are several that we don't, and the only reason that we don't have anything to do with the laws. It's more what is the highest and best use of our time? Because again, time is the only thing that once gone you can never get back. To me, time is the most precious asset that we have, and so as an investor, myself and my team, we focus on what is the highest and best use of our time and money. There are several states that we don't invest in because they are not the highest and best use of our time and money. In other words, there are foreclosure periods that are anywhere from 24 to in excess of almost 60 months. I don't want to lock up my investment money, for that long a period of time on just one asset. So for me as an investor, we will avoid those places. But for the most part, we invest all across the country, and we take it one asset at a time, and we make sure that it is going to be the highest and best use of our time and money.
Now, Paige, what has been the most rewarding part of being a note investor for you?
I'm so glad you asked that. The best part about being a note investor for me is when we can help a family that has had life happen to them, meaning, either divorce or medical problems or whatever, and they haven't been able to pay their mortgage, and they're under threat of losing their home, and their kids are under threat of having to move and change schools and friends and whatever else. The best part for me is that I am in a position to be able to help that family that the big banks have not cared about to actually stay in their home and make a profit doing it.
Now, real estate is very location-specific and market-specific, but looking at real estate and some of these notes all across the country, what are some of the trends that you're seeing nationally, and where do you think we are in the current market cycle?
That's really interesting that you say that. There's a lot of debt that is out there, and what makes notes unique is that people have a tendency to buy in terms of buy and hold properties where markets are very hot and where there, are jobs, of course, because real estate is really where jobs are. So we are in a unique position in that for the most part, everybody likes to live in a home for the most part, right?
Right.
So, and because we buy in a very, at a discount, we have a lot of equity. So something where markets are not necessarily as hot, we will be able to get a bigger discount and create more equity. But again, that's why, for us, population is a big thing because we need to know that we're going to be able to capitalize on our investment. Now, in terms of trends, I wish that I could say that I had a crystal ball. There are others that are very good in terms of market trends and seeing where jobs are going. And we do follow that, but it's not as necessary in this particular space because, again, we're building in such a cushion of equity, and we do things in our evaluation that mitigate against that risk, namely population. That's one of the big factors. I've mentioned that several times. So I think there's been a big shift, though, I will say, from a lot of fixing and flipping and even buy and hold into the note space. That's if I'm going to say about a market trend, I'm going to say investing trends have shifted a little focus into this space as well. And that's for a reason, because there's a lot of bad debt that's out there that's available, and it gives us a great opportunity to help people.
Now, Paige, one habit I've observed from very wealthy and successful people is that they're always studying new subjects and learning new skill sets. What are you currently studying, and what skill sets are you currently learning?
That is a great question. I actually have a book on my desk called 401 Chaos. It's by Andy Tanner, and I happen to know Andy, and I respect him very, very much. But it really dictates kind of the scam of the 401k, for lack of a better word. And I hate to say that, live on the air, but it's so true. And it's fascinating to me because I'm really focusing on alternative methods to propel my own portfolio and my own capital into much better solutions. So that's what I'm learning right now. And then, of course, I always go back to an old favorite. I actually read this book once a year, and it's called The 7 Habits of Highly Effective People, just to kind of reinforce some of my own attributes and focuses. And I think that's just really, really important. And for all of the new people out there that are listening, one of the biggest downfalls that you have is that you're inactive. You need to be proactive. So there's a couple of the things that I'm focusing on right now, MC.
Thank you for sharing. Those are 2 great books. If I have spoken about 401ks on the show, so my listeners know that I'm definitely not a fan. If you haven't read 401 Chaos, I would highly recommend that. Yep. Because unfortunately, there's a lot of people that are finding out really what these plans are all about, and how it has failed the majority of people. Yes. Now, Paige, a core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So if you cannot pass on any money to future generations and we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
Oh, great question. I love that. Well, for me, integrity and honesty go hand in hand. So that I would count as 1. I have had life happen to me, MC. I've been involved in the economic downturn, and I know what that is like. And more to the point, I think that if you continue to conduct yourself in a manner that has integrity and honesty, you will be surrounded by people that will help to propel you in so many different avenues of your life that you can't. Doors will become open to you that you wouldn't even think there's even a door there. So be a person that is honest. Be a person that does what they say they're going to do. That certainly would, if everybody just did that one thing, that would make this world a much better place. So that's number 1. Number 2 is persistence. Nothing in this life is easy. And if anybody tells you it is, you should run in the other direction. You need to be persistent. You need to dig deep and define yourself as a person, as a business person, and who you want to be. And then through integrity and honesty and persistence, you will get there. But again, persistence is so key. You can't give up. Don't give up on yourself, because you deserve more. So be persistent, be honest, have integrity, and you're going to get very far. The third one is team. You have to develop a team and rely on a team. That's hard for a lot of people, and a lot of people will go through this life thinking that they can do it on their own. And for me, and those that are very successful, all have a team of people around them, and generally they're people around them that have more of the answers than they themselves have. So surround yourself with a team, ask lots of questions, learn, and then grow, and then build a bigger team. But those are the three things that I would say are vastly important to be successful and get you to where you want to be. And that doesn't necessarily mean wealthy dollars.
Thank you so much for sharing that. Paige, how can my audience learn more about you, your company, and stay informed of all the projects that you're involved with?
Oh, thank you. Yes, I definitely would love them to come to my website. It's cashflowchick.com. That's cashflowchick.com. If they're interested in learning more about note investing, there's a little button at the bottom that they can get on a phone call with me for 30 minutes. It's free, of course. There's all kinds of information there. I also teach a class where I really dig deep and I go into detail about how to buy notes, where to find them, how to finance them, the due diligence steps to take once you do find a note that you think you want to buy. So I do teach a class about that. That's also on my website. The information will be there. And I would love to talk to anybody who is interested in this amazing place of real estate investing.
Well, Paige, thank you so much for coming on the show and sharing your journey and your knowledge around notes and providing so much value for my listeners.
Absolutely. Thank you so much for having me on, MC. I really appreciate it.
This is MC Laubscher, the host of the Cashflow Ninja podcast. As you may know, I'm also the president and chief wealth strategist of Valhalla Wealth Financial. We help individuals, families, small businesses, entrepreneurs, and professionals build their wealth outside of Wall Street and help investors maximize the use of every dollar in their personal economy and boost their investment gains. We do this by combining the capital and investments with the financial vehicle of the wealthy according to the infinite banking concept. If you're interested to learn more about privatized banking and the infinite banking concept, you can access an exclusive webinar at cashflowninja.com/be-the-bank. Thank you for joining my guest, Paige Panzarello, and myself on the Cashflow Ninja today. If you like what you hear and appreciate what we're trying to build here at the Cashflow Ninja, please subscribe, rate, and review our show on iTunes and share our show with family, friends, and your network. I'm always trying to learn and improve in every area of my life, so if there's any way that I can provide more value to you and serve you better, please reach out to me at info@cashflowninja.com. If you're not a subscriber to the Cashflow Ninja Gashku newsletter, you can sign up for our newsletter at cashflowninja.com or text Cashflow Ninja to 44222. That's 2 4s and 3 2s. You can also support the show by becoming a patron on Patreon for $10 a month. When you become a patron for 12 months, you get access to our private Facebook page and a Cashflow Ninja t-shirt. Jimmy Freeland and Bob Scott have been in your shoes and have used real estate investing to become financially free. They've designed a system to take any beginner to an experienced deal-making investor in the least amount of time. They offer opportunities from basic education, coaching, bridge loan investing to turnkey investments in the cash-flowing market of St. Louis, Missouri. For more information, please visit joinupsproperties.com or call Jimmy and Bob at 314-799-2247. If you're not earning at least 8% on your cash, you do not want to miss the private lending presentation for non-accredited investors done by Jimmy Freeland and Bob Scott. Discover how to create an income stream from real estate without the management headaches. You can access the presentation at cashflowninja.com/private lending. Creating passive income for you and your family is easier than you think. All you need are 3 things: the right plan, the right product, and the right turnkey provider. As an investor, you want a safe, profitable, and convenient way to invest your capital without being at the mercy of stock market fluctuation. Investing in real estate in a turnkey way that provides monthly passive income with very low risk is exactly what Spartan Invest provides for their clients. Their mission is to make investing in real estate easy for the busy professional. Spartan Invest help investors create passive income and wealth through turnkey ownership in Birmingham, Alabama. You can download your free report, 5 Big Reasons to Invest in the Magical City of Birmingham, Alabama at cashflowninja.com/Spartan. The wealthiest families on the planet know how to capture their wealth and then leveraging their wealth through their own banking system. If you're interested in privatized banking and the infinite banking concept and learning the premier strategies of the wealthiest individuals and families on the planet, you can access your free webinar at cashflowninja.com/be the bank. That's our show for today, everyone. Until next time, live a life of passion and purpose on your terms.
You have been listening to the Cashflow Ninja with your host, MC Laubscher, the podcast empowering and inspiring people to discover how to generate their own income and manage, grow, and protect their own wealth in the new economy. Today's show notes and resources are available on our website, cashflowninja.com. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objective, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.